once you break out of 50, I mean, I've heard experts and technical analysts, whom I respect tremendously, say that we're uncharted waters, and it could quickly go once it breaks through 50 and sustains that. It could quickly go to 70, 80, maybe ultimately even 100. And frankly, given the demand and given what kind of economic environment we might be at that point in time, I would not be surprised, to see it go well beyond that at some point. So ultimately, I mean, my target, and I talk about it in the book, and I justify how I get to this number, is $300 silver, and I'm thinking we're going to get there in some kind of a mania phase.
Silver has emerged as one of the standout performers in the commodities sector, with prices experiencing a remarkable 5.59% increase over the past month alone. According to leading analysts, this impressive short-term growth contributes to a nearly 25% year-over-year appreciation, positioning silver firmly in silver bull market territory. Despite gold remaining at elevated levels, ongoing geopolitical tensions and regional conflicts continue to impact global stability. According to Zhang Yi, CEO of the iiMedia Research Institute, this environment has led silver and other precious metals to increasingly serve as alternative safe haven assets for investors seeking security amid uncertainty. Renowned Silver Advisor Peter Krauth maintains a long-term forecast of $300 silver during a future mania phase and notes that some respected analysts have projected potential upside as high as $500. According to him, silver's rally is ahead of schedule with $50 as a target for 2026. He believes that once silver decisively surpasses this threshold, it could quickly accelerate toward $100. Based on technical charts, silver is now leading gold, with each breakout level forming new support. According to the latest market data, the spot price of London silver has risen by 30.85% this year, significantly higher than the 26.91% increase in London gold over the same period, making it a stronger asset in the precious metals sector. Moving forward, Peter Krauth acknowledges the role of technical analysis in liquid markets, such as silver, where key levels often become self-fulfilling. He cites famed investor Jim Rogers, who also pays attention to technicals for this reason. Krauth concludes that once silver decisively breaks above $40, it could spark a major repricing event. With concerns about inflation, technological advances, and growing investor sophistication, these precious metals may offer diversification potential depending on market conditions. Before we dive into Peter Krauth's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I still think we're going to see at some point $40 in the second half. Frankly, $45 will not shock me this year. I still feel like $50 is going to happen, and it's going to happen at some point next year. It's feeling more and more like it's going to happen in the first half of next year. And 50 is that sort of, elusive but magic number in silver, because if you look at, we talked about technical analysis before. Silver is considered, there may be one other asset, I can't remember what it is, but if you look back, over decades, it's it will be one of the most significant, if not the most significant technical breakout, price breakout of all time, of all assets, simply because it's taken so long, it will have taken so long to ultimately break past that 50. If you look at all the other metals and all sorts of other assets, they've managed to do that. Silver hasn't yet. So once you break out of 50, I mean, I've heard experts and technical analysts, whom I respect tremendously, say that we're uncharted waters, and it could quickly go once it breaks through 50 and sustains that. It could quickly go to 70, 80, maybe ultimately even 100. And frankly, given the demand and given what kind of economic environment we might be at that point in time, I would not be surprised, to see it go well beyond that at some point. So ultimately, I mean, my target, and I talk about it in the book, and I justify how I get to this number, is $300 silver, and I'm thinking we're going to get there in some kind of a mania phase. I still think that, but I will say this: I'm surprised frankly, that I've heard estimates from, people I consider very serious, very accomplished analysts talking about ultimately $500 silver. And so I don't feel like I sound that crazy when I talk about 300. So again, that would be in a mania phase. And that, if depending how quickly we got there, that would wreak havoc, of course, on the whole sort of industrial side of silver use. So anyways, that's something for another day. But be prepared and think about taking some profits. As I say, it's just probably a matter of several months earlier than I kind of expected. I'd been saying for probably since the end of last year, we would see, 35 taken out in the first half, and then probably 40 taken out in the second half of this year. We're not at 40 yet, but we're very close. And frankly, if 40 happens sometime soon, or even just in the second half of this year, I will not be surprised at all. And if the momentum keeps up, I think we'll see perhaps even as high as 45 at some point this year. And I've also been saying that that sort of magic $50 level was probably going to be at some point next year. That's obviously looking farther out. It's still kind of where I'm seeing things right now. But the momentum is absolutely there. I've been somewhat surprised to what extent the momentum has kept up. But people are starting to pay attention. Gold has been more in a bit of a consolidation phase, and silver has sort of taken the lead, taken the baton. And you look, if it's kind of been one of these staircase patterns. If you look at how silver has behaved, it was 32. That was a ceiling for a while. The next one seemed to be 34. So once it moved above 34, that ceiling became a floor. So kind of the new step. Once we moved through 36, that became a new step. We're now what I believe is 38 as the next staircase step. And certainly 40 is, like I say, I've been expecting 40 at some point, second half of this year. And I think that will act the same way. Trigger point, probably, because these big round numbers do tend to have more effect. And at just the way 3,000 in gold or 3,500 in gold, had a bigger effect. And I think you're right. I agree with you. $40 will be a big trigger. Now, it may attempt 40 and then not be able to close above it. And that may be a tougher ceiling to break through for a while, because it's a psychological barrier in this sort of big round number, so to speak. But I agree. Once we get through that, I mean, we'll have come from, where we were back, just perhaps the early part of last year. If I remember right, we were, somewhere close to about 20 in February or so. And here we are at 38, 39. It's just incredible. It's almost a double already. So it's really quite spectacular. Yes, I think that's going to be a big deal. And technical analysis, I agree with you. I do like to watch it. I'm not an expert in it, but I do like to watch it. And what I think about technical analysis is that one of the big reasons that it is important, especially let's say for the commodities themselves, as opposed to companies or whatever, is that the commodities are heavily traded. And so even if I'm not, but if you happen to be a technical analysis skeptic, even a guy like Jim Rogers, who's, a big, fundamental research kind of guy and so on, he said that, he pays some attention to it. And if for no other reason, that he knows that there's a big chunk of the market that does pay attention to it. And it's one of these sort of self-fulfilling prophecies. If you reach these, these levels, then the buying or the selling, whichever it may be, really starts to kick in. And so it does have an impact.
The boom industries are the main drivers of increasing demand. Total industrial silver demand increased from 491 million ounces in 2015 to a record 680.5 million ounces in 2024, and that number is expected to jump by 9%. Electronics, particularly PV solar panels, is the largest driver of increasing industrial silver demand. Experts, including Peter Krauth, have noted a growing interest in silver, particularly among speculative stocks, some of which have seen gains of over 60% this year. He states that the market resembles that of early 2011, but is now driven by structural deficits and low inventories. On the other hand, Krauth emphasizes that industrial demand, driven by record solar installations, accounts for 60% of silver usage. He further expects the supply shortfall to exceed forecasts. However, ETF inflows have surged, adding nearly 1,000 tons in 3 weeks. Krauth sees this as early-stage momentum in a strong silver bull market. Perhaps the most compelling evidence of silver's bull market status comes from unprecedented institutional investment. The first half of 2025 witnessed a remarkable 95 million ounces flowing into silver ETFs globally, according to comprehensive data from the Silver Institute. This massive influx has pushed total ETF holdings to an all-time high of 1.13 billion ounces. What makes this figure particularly significant is that the 6-month inflow in 2025 has already surpassed the entire 2024 total, demonstrating accelerating investor interest and confidence in silver's long-term prospects. Let's get back to the interview.
From people who are subscribers or interested in becoming subscribers to my newsletter, and they're asking, what kinds of things do you cover? Do you think that we're too far along? How would you allocate? Now, I'm not an investment advisor, so I can't give that kind of advice. I only tell people, kind of how I see things for myself and how I would handle things for myself. But there is absolutely a lot more interest and questions about silver itself, about allocating to the more speculative end of silver. So the developers, the explorers, even the pre-discovery explorers, and I've honestly, I have seen a group of stocks in the portfolio from January. If you take a certain handful of stocks, they're up on average 60%. This is, I'm going to say, probably 8 or 9 different stocks are up on average 60%. Some of them, one in particular, one of the standouts was, and I was a little bit late on that, my fault, but I had followed this company right around the sort of 25 to 30 cent price range. I ended up recommending it around 45 or 47 cents, I believe, and it made it to $1.20, and it took about 6 weeks. It was just unreal. I've not seen anything like this for quite some time. I'm going to say the last time would have probably been in the months, sort of leading up to April of 2011, when silver went to 49 and change, and touched that or was close to touching that $50 level for the second time in history. But I think we have a very different environment now. We're now facing structural deficits in silver, and supply is nowhere near close to coming to meet any of these deficits. The only way these deficits have been met has been by drawing down on above ground inventories. Those continue to stay very low. So we have a fundamentally very strong case for early days in the silver bull market. And I mean, you know, uh, again, the bottom line, or let's say the takeaway from this is it's certainly not too late. It has begun to become what I feel is a little bit frothy in sort of this early part. I think, if we're honestly actually a little bit lucky, we might get a little bit of a correction, or at least a consolidation for a little while. It would be very healthy, but it's still early days. So I see that demand really coming from industrial demand. We're at a point where it's something like I think it's nearly 60% of all consumed silver goes to industrial. And a big chunk of all of the silver, about 20% or so, goes to solar panels alone. And I don't remember the specifics, but I've been reading some research recently that, earlier in the year had said there had been research saying, well, there's risk of recession, et cetera. With all this sort of tariff deal going on, there's a risk that we're going to see solar panel continue to, or we're going to see solar production sort of level off or slow down. There's a little bit of an effect of thrifting, meaning looking for ways to use less silver for for solar panels, but we haven't seen that happen at all. In fact, there have been record numbers of solar installations. China is a really big one, not only for production but for installation of solar panels. Um, for different reasons, I think that there's been government incentives to roll out solar installations in China, and they've been installing record amounts of solar. So the demand for silver to produce these panels continues to grow. And so I think that some of the forecasts where we saw the Silver Institute, for example, I'm trying to look at these numbers actually right now. They said that they expected to see industrial actually drop slightly, like 0.5% from 2024 to through 2025. And I think that that's going to probably end up being wrong. I think we're going to see that actually grow a little bit. And they said that they expected coin and bar demand to go up by about 7% in 2025 over 2024. I think that'll be taken out to a much higher level. And they also said that they expected inflows into silver ETFs to actually be up by about 14%. So far, they've been, I don't know about percentage wise, they've been right on that call. But I was saying to you earlier that there have been some numbers just recently that showed the inflows of silver into ETFs since the beginning of June. So from early June to July 4th was 990 tons. Half of the inflows had happened in a matter of about 3 weeks. So people are really starting to pay attention to silver. It's not just the industrial demand. It really is really starting to flow into buying silver, physical silver, or at least the ETFs as a proxy to physical silver. And so, these ETFs, especially the better ones, they have no choice. They have to go out and find the silver to match the buying of the outstanding shares that they have to issue for the ETF. So that shunts a demand into new physical silver, and I think a lot of that's coming from the above ground inventories. As I say, there just is no new supply to meet the shortfalls. That's another point, actually. Um, the Silver Institute said that there was going to be a market shortfall of about 150 million ounces this year. Sorry, 117 million ounces this year, and that in 2024 it was 148 million ounces. I think that's going to end up being wrong as well. I think that there's going to be a bigger shortfall than they forecasted. And it'll probably be at least close to last year's of about 150 million ounces if it doesn't surpass it anyways. So it's just a very robust market. Doesn't seem to be slowing down at all. And people should have exposure to it. You don't have to have exposure and it being sort of on the higher risk end of the spectrum. I give a couple of examples in my book, The Great Silver Bull, of you had two of the biggest market cap silver companies. So that being Pan American Silver and silver and what's Wheaton Precious Metals today. It used to be Silver Wheaton. So that's a royalty company, huge market caps at tens of billions and so on. And these companies, at one point or other, in sort of the first half of the secular bull between 2001 and 2011, on different time frames, were both up something like 16 or 17 times. One of them was up that rate, and I think it was a space of about 2 years. The other one took about 5 years. That's incredible returns for some of the largest market cap silver companies, public companies in this space. So that just shows you don't have to take sort of these outsized risks. But even the small guys have really been paying off lately. So, spreading it across that is not a bad idea either.
Silver prices are reaching new highs, and investing in commodities like silver is one way to diversify your portfolio during an uncertain period for the stock market. The precious metals' performance comes against a backdrop of global economic uncertainty that has created ideal conditions for traditional safe haven assets. Of all commodities benefiting from the ongoing tariffs' impact, silver's trajectory has been particularly noteworthy for its strength and consistency amid conflicts between major economies. Sentiment suggests that silver prices may continue to rise this year. July's survey of over 1,000 users shows substantial optimism, with respondents predicting the silver price will reach $41.18 per ounce by the end of 2025, 42.4% above where it started the year. With institutional investors flooding into silver at record levels, is now the most strategic time to increase your exposure before silver reaches its next explosive threshold. Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.